This document is a letter from the First State Bank of Fort Towson, Oklahoma, and it's dated the 8th of July, 1914. So that's around about 98 years ago, guys. It's signed by the president of that bank, a chap called Mr. Leonard, and it's addressed to whom it may concern. It says, "This will serve to introduce Dr. William Hightower, who's been a resident of this place for the past 4 years. Dr. Hightower has been engaged principally in the moving show business and in the manufacture of his line of medicines, in which capabilities he has made good. We've had the pleasure of knowing him intimately since he came to this place, and we can state conscientiously that Dr. Hightower stands in good for his contracts and will carry them through. He is a live wire and will push through to a success enterprises seemingly impossible to others. We commend Dr. Hightower to those with whom he happens to meet." So that's essentially a letter of introduction from a banker with the banker's name on it and the banker's heading on it. And it's dated July 1914. The first paragraph of that, "This will serve to introduce," is really the critical piece. It's the introduction. It's the bank saying this is who he says he is. The rest of that letter is by and large attributes about what he does and so on. And therefore, what I want to try and do in the space of very, very few minutes is to suggest to you guys, many of whom I think come from banks, that in the times that we live in, and the times that the banks are under unprecedented pressure, as we know only too well, there is actually a very significant opportunity, particularly in the UK, to reinvent the role of the bank and to build it around this business of identity, of trust, of non-repudiation, and so on. That essentially is what the banks did years and years before they lent money, before they traded in IRSAs and fixed income and all the rest of it. They actually stood behind their customer. They vouched for their customer. And that, I suggest to you, is something that banks would do well to start looking at once again. It's what I call managing operational risk as opposed to managing capital market risk or indeed managing credit market risk. It's operational risk. I would also put it to you that when Lehman went belly up, yes, there were some people who lost a ton of money. When Northern Rock went belly up, yes, there was a queue around a city in northern England. But a third area, so those are credit and capital markets, but the third area, operational risk, by which I mean the payments business and so on, looked after by Vocalink and people like them, if that had gone belly up, there would have been riots on the street within 24 hours. So it's a point one really wants to make clear to everybody that operational risk, that payments infrastructure, the movement of value from one identity to another, if you like to look at a bank account with a string of numbers, that's what it is. That function is critically important to the future of society. And again, with reference to Connor, it's not just important in the UK. With great respect to our colleagues in Brussels, it's not just important to those who live within the European Union. It is in fact important globally. For any business, large or small, whether you're doing business with the guy next door, with the guy in the next door town, or the next door country, or across Europe, or across the world, it doesn't make any difference. It all happens instantaneously. So that's a long way around saying that this is what guys like this lawyer and a bunch of other lawyers were paid a great deal of money for by a collection of British banks and US banks, Australian banks, French banks, and so on, to create a trust model whereby banks would be issuers of electronic credentials to their customers. They would essentially do what Hightower wanted here, but do it in the internet era. And they would do it under a common trust model with contractual law that limited and managed the liabilities between issuer and user, between relying party and the relying party's bank, what we might call in the card world, the accepting bank. So they built this trust model, and that is essentially what I think we need to zero in on as banks and as thinkers in a very practical world today. Look at what happens in business today, in commerce, anywhere. These are all just sample ideas of things that go on pretty much every time a transaction is done. The message here is that banks have got a real role in intermediating between all those different verticals going on in the transaction cycle. So I hope that's clear. This is nothing. There's not rocket science in this. It's just taking what banks do in the payments world and extending their role as quote-unquote identity brokers, as Andrew has highlighted, between two parties. Whether or not banks do all the other stuff and offer those applications to the customer is up to the banks themselves. but there is a role for banks in providing that identity broking business. So what do we mean by trusted identity? We mean these things: having absolute certainty in knowing who you're interacting with, being able to check and validate that it is indeed the case, knowing who guarantees the identity of the individual, it being a real name and not just a number. I would caution you on this, that the strength of it at the end of the day ties down to a human being. A credential is registered to a human being. It's not just a string of numbers. That's what happens. That's the purpose of KYC, if you think about it. Having complete trust to act on the instructions, having a transparent audit trail of who did what and when. Again, I would suggest to you in banks' activities today, particularly in the wholesale markets, who signed what and when is kind of pretty critical given the debates of the last 48 hours or so. Seeing electronic identity as a key component to limiting liability and external exposures. So in the online world, this creates so many significant issues to overcome, and there's an enormous opportunity here for banks to help their customers navigate through this. You'll see lots of solutions out there as to different identity management solutions. There's lots generally in the bottom end of the pile here. Technology-based solutions. They might be Iris, they might be PKI, there might be all sorts of other things. The point is that the higher up these arrows you go, the more complex it becomes. Therefore, the reason that we engaged people like Connor and other lawyers was to help us build that entire structure that all the banks could sign up to a common set of what we call policy, legal, operational, and technical dimensions of a scheme, of a trust model, so that the liabilities between all parties are clearly defined up front. And equally on that triangle, it's not a question of just doing it within the UK. With great respect, not even with just doing it inside Europe. It's got to be done with multiple communities of interest, i.e. multiple industries and multiple legal jurisdictions. And if you think about that, that's what you guys do in the payments industry today. You span multiple jurisdictions and you span multiple different industry verticals. So I pretty much rest my case there. I think I've talked long enough. I hope it's clear. The rest of the slides I'm sure, will be available for you. And Connor, I think probably we'll open it up to questions if you want.